Okay, so weekend update, little earlier than usual because I'm having a 10-hour flight later today, and I don't have time on Sunday. So anything can happen, but for now I assume the market is gonna gap up Monday, and that's because the Asia session has rebounded after the US crash yesterday. So at the moment, futures are up 1.22%. And yeah, the market will be very sensitive. A small bullish news may push the price up, especially if it's about the chip sector. If there's only a little bit of bearish news or some news that could be bearish interpreted, then I think the downside is huge from here. So anything can happen, but for now, let's assume the market is going to gap up on Monday. Yeah, first of all, the bounce here, yeah, it makes sense because it's just a range and we are at the bottom third of the range, so that's also where the reversals happen. Yeah, so bulls and bears are still fighting in this range. It's a triangle too, so it's going to be interesting to see how this plays out. Longer term, I remain bearish because yeah, like I said before, this dip was not enough. It's not a healthy dip, and then this move up is way too strong. So if you look back at history, any market, any time frame, that's asking for troubles. Yeah, so I assume that the market will, the bulls and bears will fight, and then we are going to roll over somewhere, or bulls may try for the breakout and then fail, and then we're still going to roll over. Historically, once the market starts to test previous highs, so like here we tested this one, here we tested this one, it came close. Well, in trading, close is close enough. Here we tested this high. If it happens in a very early in a trend, then the trend is so strong, and then you usually don't see the market coming back. If it's a phase shift from a bear trend to a bull trend, or from a range to a trend. But here this trend is going on for a very long time. We started testing previous highs, so it would be very unusual if we are not going to test this high again. I'm highly confident the market is going to come back here. And even if we do go higher, I still think it's going to fail. And yeah, it would be good for everyone. It will be good even for the bulls, because if we are going to continue a lot higher from here, then the crash afterwards is going to be like a 1999 bubble pop, and that is not good for everyone. So I hope the market is just going to behave normally, and yeah, that is, we're going to see some retracement in the weeks and or months ahead. Yeah, so the market is up overnight based on the Asia session. So I was looking at SK Hynix. Here is a very strong rebound. So that short term we are just playing the range, bulls and bears fighting. Longer term, yeah, it's an extremely stretched, extremely climatic trend. So the end is very, very close. Usually, if you see a climax, well, this is here we have a trend, and here we shifted from a range or from a bear leg to a bull phase. So this low does not have to test this high because it's the early in the trend, so it usually does not test it. But then here we go sideways, up, and then we finally climax to the upside, and we retrace basically all the climax. So this is what if you study climaxes, this is what you very, very often see. This is the natural way how climaxes work. We crash, we go sideways for a long time, and then we can start trending again, higher or lower, both 50% chance. It will also depend on the fundamentals. If they are still good, company still doing buybacks, we will probably break higher again. If fundamentals weaken, demand is weakening, then we could crash lower. So This is actually a very good example of a climax. Retrace it all. Yeah, that's how these markets usually work. All right. Okay, see you next time.